Transport Canada is freezing rebate payments for Tesla until each claim is individually investigated.
Mark Carney campaigning in Windsor, the heart of Canada's auto sector, at a moment of crisis.
Donna, vehicles are Canada's second largest export by value at $51 billion. The vast majority of those, 93%, go to the U.S.
Tesla faces a multi-million-dollar shock from Canada. Is the golden era of the EV giant ending? Tesla, the most renowned name in the electric vehicle industry, now finds itself at a critical crossroads, shaken by a severe crisis involving Canada. Recent developments have not been favorable for the company. On one side, U.S. President Donald Trump has introduced new tariffs, and on the other, Canadian Prime Minister Mark Carney has responded with countermeasures directly targeting Tesla. This situation extends beyond Tesla alone. It reflects broader tensions in the global automotive industry and the growing complexities of international trade wars. In retaliation for President Trump's tariffs, the Canadian government has removed Tesla from its electric vehicle EV incentive program and frozen past payments owed to the company. This move not only jeopardizes Tesla's future in North America, but also places significant pressure on its stock prices and investor confidence. Yet, this conflict is more than just a dispute between Tesla and Canada. It is influenced by global supply chains, the U.S.-China trade rivalry, stringent European regulations on electric vehicles, and the overall state of the automotive sector. But how did Tesla, one of the world's largest EV manufacturers, find itself caught in this diplomatic storm? What led to its exclusion from Canada's incentive program? Could President Trump's new tariffs further disrupt the balance of the North American auto market? A clash between Tesla and Canada. Tesla, led by tech mogul and Trump ally Elon Musk, has long been a pioneer in the EV revolution. However, it has often found itself at odds with regulators. The latest dispute with the Canadian government stems from a billion-dollar controversy surrounding Canada's taxpayer-funded EV incentive program. A combination of Musk's political involvement and Trump's new tariffs on Canadian goods has pushed Canada to take a hard stance against Tesla. Not only has the Canadian government barred Tesla from receiving future incentives, but has also canceled a rebate of 43 million Canadian dollars. Prime Minister Mark Carney condemned Trump's tariffs on Canada's auto industry, labeling them a direct attack. In response, he convened an emergency cabinet meeting on March 27th, declaring,
and this is a direct attack, to be clear, a direct attack.
"We are taking steps to counter President Trump's attack on our workers and industries." Carney reassured Canadians that they would overcome this crisis and emerge with a stronger, more resilient economy. The final straw for Canada came when Tesla submitted a massive application for incentives just as the budget for the incentives for zero-emission vehicles, IZV, program was nearing depletion. Tesla requested 43.1 million Canadian dollars, equivalent to 30 million US dollars in subsidies, raising suspicions among officials. The controversy deepened when reports surfaced that Tesla had allegedly sold 8,753 vehicles across just 4 Canadian dealerships in a single weekend, an average of 1 car every 30 seconds. The Canadian Automobile Dealers Association deemed these sales figures unrealistic, suspecting manipulation of the system. Transportation Minister Chrystia Freeland swiftly launched an investigation, leading to the suspension of all payments to Tesla. This decision struck a major blow to the company's financial planning and escalated trade tensions between the U.S. and Canada. Tesla's history of incentive maneuvers. Tesla has previously leveraged government incentives to its advantage. When the IZV program was introduced in 2019, the Tesla Model 3 exceeded the eligibility price cap of 45,000 Canadian dollars, as the Model 3 Standard Range Plus, SR Plus, was priced at 52,000 Canadian dollars. In response, Tesla introduced a compliance model with a reduced range of just 151 kilometers, pricing it at 44,999 Canadian dollars to qualify for incentives. While this allowed Tesla to receive millions in subsidies, it raised concerns that Canadian taxpayers were unknowingly subsidizing Tesla purchases. Since 2019, Tesla has secured a staggering 713 million Canadian dollars in EV incentives, making it the largest recipient of such subsidies in Canada. The recent surge in Tesla's incentive applications, from 300 to 5,800 within a short span, was viewed by Canadian officials as an abuse of the system, ultimately leading to the company's removal from the program. Trump's tariff strategy, a boon or a disaster? On March 26, President Donald Trump announced a 25% tariff on imported cars, asserting that the move was final and non-negotiable. He warned that if the European Union aligned with Canada, he would impose even harsher tariffs. Trump's goal is to boost American car production and reduce reliance on foreign parts. However, many economists and industry experts argue that such tariffs could backfire. Major American manufacturers like General Motors, Ford, and Tesla rely on global supply chains, and increased tariffs may lead to higher production costs, reduced profitability, and slower sales. If production expenses rise, automakers may be forced to increase vehicle prices, potentially dampening demand and weakening U.S. industry competitiveness. With these tariffs set to take effect on April 3rd, analysts warn that global trade wars may escalate, significantly impacting the American and global automotive markets. The impact on Tesla stock and global sales. Amid these tensions, Tesla stock value has been on a roller coaster. On March 25th, 2025, the company's shares surged by 12%, marking a rare moment of optimism. However, despite this brief recovery, Tesla shares remain 44% below their all-time high from December. Following Canada's decision to withdraw Tesla from its EV incentive program, stock prices plunged by 5.6% to $272.06, causing a sharp decline in market capitalization. Tesla's troubles extend beyond North America. In Europe, Tesla's new car registrations dropped by 47.1% in the first 2 months of 2025, reducing its market share from 2.5% to 1.4%. Musk's controversial political stances, such as his support for Germany's far-right AfD party, have further damaged Tesla's reputation in Europe. Additionally, aggressive pricing strategies from Chinese automakers and new European regulations are challenging Tesla's dominance. Despite a decline in U.S. sales, Tesla remains a global leader, having delivered 1.79 million vehicles in 2024, only slightly lower than the 1.81 million units sold in the previous year. While the company faces challenges in North America and Europe, it continues to hold a strong global presence. Tesla's path forward, risk or opportunity. Tesla's fluctuating stock prices reflect investors' uncertainty about the company's future. While some see this crisis as a buying opportunity, others worry about Musk's unpredictable leadership and Tesla's vulnerability to global competition. Chinese EV makers like BYD, XPeng, and NIO are aggressively expanding, offering more affordable models and threatening Tesla's market share. Looking ahead, Tesla has several potential paths. It may challenge Canada's decision legally, arguing that its exclusion from incentives violates international trade agreements. The company could restructure its North American supply chain to adapt to new tariffs. It may double down on expansion in China and Europe by adopting a more competitive pricing strategy. However, lowering prices to compete with Chinese automakers could hurt Tesla's profitability. Alternatively, Tesla may choose to maintain its premium brand positioning, focusing on high-end models and autonomous driving technology.